Can you be sued for foreclosure when your mortgage payments are current? Or better yet, you don't even have a mortgage on your property? The surprising answer is yes. Today's tip will discuss how this can happen and what protection you need to have in place to get you out of a predicament that you did not cause. As we discussed last week, a buyer can be protected by one of two things: the warranties under the deed that the seller transferred ownership by, and the coverage afforded by their owner's title insurance policy that was issued to them at the time of closing. Today, we will dive a little bit deeper into the protections afforded by the owner's title insurance policy, because in certain circumstances, it can be used as a tool to clear up the title to your property. When you enter into a contract to purchase property, you make your deposit to the escrow agent, and the title company performs an in-depth search of the official property records. The search results are then broken down on a title commitment. Schedule A of the commitment shows things like the property address and legal description, the date that the search was run, the policy amount, which should probably match the purchase price, the names of the current owners of the property, and the names of the buyers. Next comes Schedule B1 and B2 of the title commitment. B1 is a list of the requirements that have to be met by the seller, buyer, and title company before the closing can take place. And B2 is a list of the exceptions from coverage that will be listed on the final owner's title insurance policy that the buyer obtains at closing. The cost of the title insurance policy is a one-time premium, which is collected on the settlement statement at the time of closing, and it remains in effect for as long as you own the property. If for any reason you decide to change the way that your property is titled after closing, I highly recommend consulting with an attorney who's familiar with the language in a title insurance policy to see if that change will cut off coverage or if coverage will continue after that change is made. Now that we've gone over the issuance of the owner's title insurance policy to the buyer, let's move on to the example that we started with, an improper foreclosure action filed by a bank seeking to take your property away. One of the ways that this can happen is by the mishandling of funds that were intended to pay off the seller's mortgage. In this scenario, the title commitment indicates on the Schedule B1 requirements that the seller has a mortgage that must be paid off at the time of closing. Either the seller's attorney, or the title company handling the closing secures a payoff letter from the lender, and on the day of closing, wires those funds to the lender to satisfy the seller's obligation. However, if that payoff letter is tampered with, the funds intended to pay off the seller's mortgage can be diverted elsewhere, and now the mortgage remains unpaid. It can take weeks or even months to discover this kind of fraud. In the meantime, the seller transferred ownership of the property to the buyer, and the buyer paid the purchase price and took possession of the property. It may not be until the buyer, who is now the owner of the property on which the seller's mortgage is a lien, receives a summons indicating that a bank is suing them for a foreclosure case, that this issue is even discovered. The buyer can then make a claim under their owner's title insurance policy, and the underwriter will determine the validity of the claim and how it will be handled from there. Sometimes claims can be resolved with a monetary payout. Sometimes the underwriter will hire an attorney to defend the buyer's ownership rights, and sometimes it's a combination of both if that falls within the policy limits. But without the protection of title insurance, this buyer would be responsible for paying for their own attorney and any costs associated with defending their ownership rights to their property. From a seller's perspective, the issuance of a title insurance policy to the buyer of their property acts as peace of mind that the buyer will make a claim under their policy for any unanticipated title issues instead of suing the seller for breach of one of the covenants under the warranty deed. Text the word "quote" to 561-225-2676 to determine the cost of obtaining an owner's title insurance policy.